Goedemiddag iedereen. Vandaag zitten we hier samen met niemand minder dan Raoul Pal en Jerome van Kierok, als ook teammember van Trade Premium. We zullen het vandaag hebben specifiek over macro-economie, AI, crypto, alles wat gerelateerd is op dit moment. En zonder verder oponthoud zal Jerome starten met deze call. Hij zal de leidende host zijn van deze call. Dus bij deze, Jerome, bedankt voor hier vandaag aanwezig te zijn en hier tijd voor vrij te maken.
Geen probleem. Okay, cool. So thanks Raoul for joining the call. It's a pleasure to have you on and have you speak for the community. So for everybody that's tuning in, Raoul is the founder of Real Vision. If you don't know Real Vision, I would definitely highly recommend you to have a look at their website. Maybe like a first question for you, Raoul, would be like, a small intro on Real Vision would be awesome, and a small introduction about yourself would also be very cool and very appreciated. So
yeah, I'll give you a bit of background. Hi everyone. Give you a bit of background about me. I was in financial markets for a long time. So I was working for Goldman Sachs and other leading investment banks. I then started and ran a global macro hedge fund because that's how I saw the world, in this kind of global macro jigsaw puzzle that we all try and figure out.
Yeah.
I then left the hedge fund business and moved to the Mediterranean coast in Spain because, as you know, living in Northern Europe, the weather's terrible, and Belgium is the same weather as England. So I decided to move to Spain and lived in Spain and started writing Global Macro Investor, my kind of institutional research service. And that's subscribed to by the biggest hedge funds, family offices, sovereign wealth funds, those kind of people. I was there over the financial crisis in 2008, and I luckily predicted what was going on. And then we went into the European crisis, which people will remember in 2012. And again, I predicted what was going on, and I'd kind of made money out of those events. And I tried to warn people, but I didn't really have a platform to do that because my research was read by all the big hedge funds, but not by average people. And, you know, Spain had a real crisis over the 2012, and lots of friends of mine went bankrupt. The property business collapsed. I lived in a beach town. I mean, that's half the business is property development. And people had their life savings taken by the banks. And I'm like, I need to do something about this. People came up to me and said, why didn't we know? So I thought, you know, this is something I should do, is try and figure out a way of engaging more people and giving them the kind of information they need to navigate these really difficult times. So that was two things started from that. One was I decided to start a video on demand platform called Real Vision. Everybody else at the time was doing this short form video. It was free with advertising. We said, no, we're going to do long form, bring in the world's best investors that only we had access to, and create a whole new genre in the space, which is what Real Vision pioneered. And still to this day, we interview the world's smartest analysts, strategists. We have kind of an unparalleled access to everybody. And it's a place for people to come and learn, you know, and we also have research services, and we're also deep into Web3 and crypto. That journey started exactly the same time. So when I was trying to figure out what the hell to do about this broken financial system, I was trying to start the world's safest bank with a whole bunch of other friends. And it was very difficult to start a bank that didn't use fractional reserve banking. The idea was we were just going to take deposits and buy government bonds with them, and that's it. And so it was safe. The problem is none of the regulators wanted it because it's going to take all of the deposits from the system. Mm-hmm. So because, you know, in Europe, I mean, things were terrible and everyone was very worried about deposits. So over that period, a friend of mine kind of tapped me on the shoulder and said, you need to look at Bitcoin. That was about 2012. And I saw it immediately as not only an asset that was interesting, but blockchain was probably the way to secure the entire financial system. So Bitcoin allows you a way outside of the system, and blockchain was a way of rebuilding the system where people knew who owned what, which was the problem with the financial system. So I wrote the first ever macroeconomic strategy piece on Bitcoin back in 2013, which it's a long time ago now. And, you know, I had a price target. I compared it versus gold, and I've had the same kind of supply and demand dynamics to gold, it would be worth $1 million. It was at the time, it was $200. And I said, well, let's assume I'm 90% of an idiot. So let's just discount it down and say, well, it's worth $100 and it's trading at $200. This is the best trade you're ever going to see in your entire life. That started my Bitcoin journey and then my crypto journey. But those two things came together. The first ever video we made at Real Vision back in 2014 when we launched was also about Bitcoin. So we have been educating people at Real Vision to say, listen, the world is broken. You need to understand what's going on because it matters to all of us. And there is a solution. And we're going to take you on that journey of discovery of that solution. And that journey, you know, I use expressions like macro is crypto because we used to get this pushback and still do from the traditional finance community. It's like, crypto, it's ridiculous. You're like, no, it's your answer. You're all getting angry about the Federal Reserve. You're getting angry about the ECB. You're getting angry about everything. And the answer's in front of you, but you don't want to see it because it's something new. So that's basically the story of me.
Yeah, that's I really like the mission statement. It's very powerful, and I love how you made these two great predictions that were very, how I would say, very important at the time. I mean, the 2008 crisis was immense, and then the Euro crisis also had a lot of impact. So if you would have known, or if we would have been able to like bet on it or like be prepared for it, given the research that you have done, that would have been awesome. So yeah. How would you describe the current macroeconomic situation? I mean, a lot has happened in the past months, I think. We've seen Silicon Valley Bank. That also has a lot to do with the bonds that they bought and you know, like the discounted value of it because of the interest rate hikes. So how would you describe the current economic situation for our members, and how do you think we can maybe prepare ourselves for these events that might be coming?
So there's a lot of noise on Twitter about the end of the world and all sorts of things. I think of this, what we're going through now, as a kind of normal business cycle recession. The only abnormal things were the inflation that was the direct opposite of the pandemic. So as there was no supply of any goods and services, people came online, then we had the Russian crisis. It was a very rare occurrence.
Yeah.
And that led to the highest rate of change of interest rates, particularly in the United States, in all history. So it's a very extreme outcome. But generally speaking, it looks like a business cycle. And business cycles, rates go up, the economy slows down, we get a recession, and then it heals. Okay, fine. So that's kind of what I'm thinking. And I think Europe's lagging the US somewhat. So I think the US probably we're probably in recession in the US. It probably gets to the worst part of it in the next quarter. And then we probably start the recovery phase. But that takes a long time. And it's always when things feel worse is when the bottom comes in. And Europe probably lags that somewhat. It's slightly behind in the cycle, maybe 3 months behind. So we're at the end of the interest rate hike cycle because now we've broken the banking system again. So once you break that, and so we got to the end of the rate hike cycle. That's about to change. Europe will follow. Again, it's always later.
Yeah.
Now, the psychology of the market cycle is the chart you've just put up. Always interesting. We are at the disbelief phase and depression phase. So this is where people can't believe the markets are rising because they know the economy is getting worse.
Okay.
Because the economy, what you're looking at is today's data. The macro world lives on forward looking. So you have to live in the future. So let's ask ourselves a simple question. Okay, there is a recession. We've broken Credit Suisse. We've broken Silicon Valley Bank. There's probably going to be a few more. What is the outcome? The outcome, we know, is with almost 100% certainty, is rate cuts. and almost with 100% certainty is more monetary liquidity. So therefore, asset prices should start pricing in those things, because the biggest driver of returns since 2008, when everything changed, has been the balance sheets of the central banks, liquidity. So if you take, I use the G5, the balance sheets of the G5. So that's the ECB, the Fed, the Bank of England, Bank of Japan, People's Bank of China. You make a composite of that and map the S&P 500 against it. 97.5% correlation. It's basically the same thing. Now, when you look at that, you realize that now the S&P is basically a voting machine or a probability calculator to when is it coming and how big is it going to be in terms of liquidity. So that's why it's going up. Now, when it comes to assets, we know that certain assets do better in liquidity environments. So European equities have never been great because there's not a lot of investors left in Europe. The average person, even their pension funds, tend to own more bonds than they own equities. So it's not a big investing culture, stock market culture. But the US is. What we find is that, generally speaking, the S&P 500 does pretty well. Technology stocks, gold does okay. Technology stocks do really well, and crypto does ridiculously well. And why is that? It's because really economic growth is not high enough to sustain ongoing high equity prices, which is what's happened in Europe. In the US, it's optically looks like they're going higher, but it's actually to do with the reserve currency of the world being debased. So when you divide the S&P by the Fed balance sheet, it's gone nowhere. It looks like the European stock market. It's gone nowhere in 20 years. But crypto and technology do beat that debasement of currency, and it's because they're secular trends driven by adoption of technologies. So they have a tailwind, while everything else is driven by an aging population that's massively in debt, and an economy that's slow.
I would totally agree. And it's a very interesting way of looking at it. I saw and I've read this like a Medium article on indeed like liquidity in the US, a very interesting article. And but I never really made a switch of denominating, for example, an S&P in G5 liquidity.
So,
it's very interesting.
If you think about this, right, what is our job as investors? What are we trying to do? We're trying to deliver to ourselves that vision of our future, right? Investing is about buying assets that you can sell later, so your future self is wealthier, better off, right? And we all have this. We have this vision of where we could be in 20 years' time. And it kind of drives us as humans. So therefore, assets at the end, that 20-year period or however long, or your trading or your investment need to be worth more in purchasing power terms.
Of course.
Now, the problem is if you forget about the Fed balance sheet, it looks like your investments have gone up. But when you try and buy another asset, you've made no grounds. Which is why crypto is so powerful, because it has a very different return profile.
Do you agree with everybody that's saying like Bitcoin is a great inflation hedge and like these kind of stories? Would you agree on that front, or do you think it's much more than that? Or like I wouldn't, like, from my point of view, it's not really an inflation hedge because it's more correlated to just like the monetary policy. So I wouldn't really think about it that way. But I'm very in your opinion.
It's a fantastic debasement hedge. It's the best debasement hedge. It's a terrible inflation hedge because it's a long duration asset. Like technology stocks are terrible when you have inflation, because you discount the future by the discount rate. So what you find is it does really, really well as a debasement hedge. In fact, it's the best debasement hedge of all, crypto broadly. But in inflation, Well, we all know we got killed last year in crypto.
Yeah,
You can
very
see it in our
hard.
P&L.
Very hard, yeah. So it was terrible. Everything was going down, and
Well,
yes, it was a
and
fraud.
simply when you step back, crypto people think it's all about crypto and it's regulators and it's FTX. It's not, none of that. So liquidity was taken out of the system,
Yeah.
indeed.
and we've got the asset that moves most according to liquidity. So when liquidity comes out, it falls a lot. When liquidity comes in, it rises even more because there's a secular uptrend. So how I look at crypto is, if you take the log chart of crypto, which everybody, Bitcoin, which everybody's
Yeah,
used,
we know it, yeah.
you use that, and it goes in these big cycles. And those big cycles are the monetary cycles, liquidity cycles. But it's still always going up. While if you look at S&P and stuff like that, they don't really do as much of that. So that's the simple way of thinking about it.
So you would agree more that it's like a high beta play on for example, an S&P 500 or something like just the.
It is and it isn't, right? It is in the short term because it's this correlated asset to liquidity. But this chart that you've got on the screen shows you it goes up a lot. So that's where the correlation breaks down. And the reason being is this is driven by what's known as Metcalfe's law. So Metcalfe's law is how to value networks. And networks are valued by the number of people on the network and the number of connections between them. And cryptocurrency has gone from, when I first started looking at, maybe a few million people using it. So now there's 300 million active addresses. Okay, and the next time we get to the next cycle, there'll be 1 billion. And so that scale of adoption and all the applications being built on it just means it goes up in price a lot. Because this is the network of money and value. I mean, that's what is the total addressable market size of that? We don't know, but if I look at all other asset classes globally, they're worth 100 to 200 trillion. So what is crypto worth in 20 years' time? 100 trillion?
Yeah.
Sure.
Yeah. It's always a fun way of looking at it that way. I mean, it's still so small in terms of market cap, and though it's very big in terms of active addresses and people on there and everybody heard of it, but it's still a very small market cap indeed. I'm very interested, like, what would you define as the role, or how would you see the role of Bitcoin in our current financial system? For example, we've seen some things in the last cycle, whereas for example, Salvador, they started using it as a reserve currency. What would you believe that might be a good fit in terms of role for Bitcoin or maybe cryptocurrencies in general in our current financial system?
So Bitcoin itself, is that pristine asset that nobody can mess with, but it's useless as a transactional currency. Now, you can use the Lightning Network, which is using the chain itself, but Bitcoin itself is not a transactional currency. So what is it? Well, it feels like it's a decent reserve currency. If you think of what happened to Russia, they got shut out of the global financial system.
Yeah.
Now, every nation understands what that means is if you upset the United States, then you get shut out of the global financial system. So everybody's incentivized to hold other assets. So gold has always been the traditional one, but it's very difficult for central banks to send gold around the world. But Bitcoin seems a reasonable way of storing value. Now, it's very volatile, so that is the problem. So you can't have a lot of it because it goes up and down too much. Bankrupt countries if you're not careful. But as a reserve asset, I think the sovereign wealth funds will be particularly interested. I think the Middle East, we've seen a lot of interest there because they understand the game as well. As the Middle East doesn't want to be beholden just to the United States or China or anybody else. So the best way is have some monetary independence. Right now, all of their currencies are pegged to the US dollars. They're one of the largest owners of US Treasury bonds. And in exchange, the US gives them fighter planes. And, there's this whole petrodollar system that's built around it. And we all know, and particularly you're in Europe, that the use of fossil fuels is going to decline. because it's been mandated almost globally. So in which case, places like Saudi Arabia, Abu Dhabi realize that, okay, they need to now think about this future where oil is not the only outcome. So i.e. they don't have all the cash flows. So they need to rebuild an economy and rebuild what they save. And so that's what I think the best use of Bitcoin remains, is like a reserve asset. But Ethereum has got my attention more from that perspective. And that's
like
because,
that.
well, because it has a yield.
Yeah, and indeed. Yeah.
You know, and if you go to any pension fund in Belgium and say, you can have this asset that doesn't pay you a yield, or you can have an asset that performs better than Bitcoin and has a yield, most people will choose it. Because again, the narrative, and this space is so full of narratives, the narrative, and again, I'm not dissing Bitcoin, but I'm just the narrative of saying, oh, it's proof of stake, not proof of work, right? In Europe, that's pretty powerful because of the green regulations. Then, oh, it gives you a yield. And considering Europeans are bond investors and not equity investors, that's great. And it's a technology. It's kind of like the internet of money. That's a simple thing to explain to a fund manager. So I've got a technology that has a yield, and doesn't affect my ESG mandates. So that alone, and then just the amount of activity that's built on top of Ethereum, just makes it's hard to see that wouldn't be easier adopted.
Yeah, I would agree. And definitely if we imagine you can find a way in order to hedge your underlying like ETH exposure, and you can just capture the yield that's given by the validators because you're validating transactions. I mean, that will be an awesome way of looking at it from like a risk-free rate perspective, maybe even.
That's right. And that's how cross-currency swaps work. It's all the same, right? I mean, ETH looks very much like a financial system that people know, and there's assets built on top. So, you know, if you were to, I did this when I was living in Spain, I switched all of my life savings into dollars in 2014 or something because of what was going on. No, 2012, because of what was going on in Europe. And I'm like, this is a mess and it's not going to stop. So I switched everything, my whole life savings, and started billing global macro investors. So my entire income was now in dollars and I was living in euros. That happens to be a very good bet. It was like a 145 or something against the dollar, kind of like my crypto bet. I went all in. But then what I realized is what you do is once you decide to make that currency investment, you make a decision. Do I buy treasury bonds and get a yield, or do I buy assets? So I bought a house in the Cayman Islands because it's based in dollars. That is the same as NFTs versus staking. NFT is an asset in that currency. So you buy scarce assets. And now what happens is in good economic times, when that economy, that digital economy, ETH, is vibrant and people are making money, well, people go and buy trophy NFTs, for example. Yeah. Like they do trophy real estate or trophy art, because it's social signaling, it's a store of value for you. It's a very human thing to do. So, at many levels, it works very well. And again, I don't think ETH will be the best performing crypto either, because the Metcalfe's law thing is the startup is where you make the most money, but that's the hardest thing to do. Trying to find the shit coin that actually really is the opportunity is difficult. Yeah. So I think it becomes much more about luck, or you have to be a real insider to understand, what each protocol is doing and everything else. So I try and generally keep it as simple as possible. Look for network adoption. Where are people building on top? So you've got things like, Doge is a really interesting one. So Doge is just one side of Metcalfe's law. There's a bunch of retail owners. Now there's a lot of them, which is why Doge is valuable. Now, what happens if somebody builds on that network, like Twitter? What is the value of Doge? It's a lot. Yeah. Because you have a lot of underlying users. Now, they have no use cases right now, apart from speculation. But you give them a use case. Yeah. Okay. That could be a game changer. It may never happen. it's not a particular bet of mine, but it's just something I observe, and we'll just see how things develop. I mean, that's why I've looked at Solana a lot, because even though it got crushed in price over the FTX thing, there's so much developer activity. There's a lot of really serious people. There's a lot of applications.
Yeah,
driving the space forward, and it's like, okay, that's interesting. Is that going to be the best performing crypto? I have no idea, but it looks like it should be all right.
And what? Yeah, zeg maar, Jerome.
No, go ahead.
What do you think actually from Aptos with the new coding language? Do you have their opinion on?
Yeah, so Aptos, I just interviewed the co-founder on Real Vision. It comes out on Friday.
Nice.
So I think both Aptos and Sui are very interesting. Sui's not launched yet, and they're both using the Move protocol. So it's a different way of doing things. Let's see. There is an issue, I think, is how many blockchains do we actually need?
Yeah.
So I think this is going to be the last bull market of layer ones.
Yeah.
I hope so.
Yeah.
Starting to become a little bit oversaturated now. I mean, we've seen a lot of L1s like pop up out of nowhere.
And then ETH sharding, do we need layer twos? We don't really know any of this yet.
Yeah.
But I think this will be the final move of layer ones, unless there's a revolutionary breakthrough. But this kind of Aptos Sui, this whole new language, let's see what that does. So interesting. And then the layer twos are still interesting, because if you think about ETH right now, ETH is, I've never seen anything like it, is every time people use the chain, you burn more ETH.
Yeah, indeed.
So we're going to go into a bull market where we're destroying ETH as fast as possible, and everybody's staking it so there's no supply. We can have a big kind of upside problem. A bubble essentially can form in that, but it's also going to make the gas fees expensive. So my guess is the layer twos do really well, because they'll move activity to Polygon, stuff like that. So it's going to be a very interesting 2 or 3 years. I think it'll be different to the previous bull market. We barely started with NFTs to know where they're going to go and what applications can be built on that. DeFi is still struggling to gain traction because of regulators, and it's just difficult to use. I mean, it's a bloody nightmare. You really need to be an expert to use any DeFi at all.
Jerome is one, huh? He's a DeFi guy, yeah? Jerome is a DeFi guy.
Yeah, well, it's hard. You need to know what you're doing. Yeah. And then the other thing, Jerome, I don't know if you've thought about this, is right now all of the ETH staking, as the unlock comes out, is going to Lido and all of these others.
Yeah.
Because it's difficult to run your own validator.
Yeah.
I don't know if that creates a concentration risk.
Yeah, because actually Lido has a lot of market share there, huh? And it was significant. There was even a DAO proposal to reduce the market share because it was just getting out of hand. It was crazy. So also in terms of our Web3 values and decentralization and that might also become a little bit in jeopardy with these liquid staking protocols that are gaining insane market share.
And liquid staking, it's de-risked a bit now, but before there was a massive duration mismatch.
Yeah,
I'm going to give you liquid staking, and I'm going to take. That's what blew up Silicon Valley Bank. Duration risk.
Yeah.
Now I don't know how they change that now. Whether that just becomes a higher volume, lower margin business because you've got liquid staking, but there's a risk there somewhere, because we've seen it in crypto. People can't avoid adding another layer of risk to make money.
Yeah.
Extra layer of leverage. So I don't like to see that concentration. It's kind of like we keep going through this.
Yeah, I totally agree, especially if you think about our what I told, our Web3 values. It's a little bit it's strange. I'm very curious because we talked a little bit about NFTs. Would you look at, for example, NFTs on ETH, let's say, a nice OG collection or maybe some cool, nice gen art or whatever, would you look at it as a high beta Ethereum play then, or how would you view these?
What it is exposure to the underlying currency.
Mm-hmm.
So that's me buying a house in the
Mm-hmm.
Cayman Islands or the US.
Yeah.
So you get that exposure.
Mm-hmm.
And then your bet is my house going to go up or down in dollar terms?
Yeah.
So is the NFT going to go up and down in ETH terms?
Mm-hmm.
Your bet is ETH is going up. And if you can then find assets that really benefit when the ETH economy is vibrant and growing, then you'll probably make money.
Yeah.
So if ETH goes up 5x and your NFT doubles in value, you've made 10 times your money.
Yeah.
So it is a multiplier. Problem is, you don't know what NFTs, you're taking risk. Now, you're pretty safe with punks and fidenzas and stuff, but they're super expensive.
Yeah.
So then you're trying to get speculative to figure out, okay, what might work. So it's there's no free money in this world.
No,
so
yeah.
it is hard.
Yeah, no, exactly. And I think seeing this amazing premium on a Fidenza or maybe like even some other cool gen art pieces. Okay, CryptoPunks, I think I understand because it's really like very original, very, OG crypto native, a crypto native asset, I would say. So there's definitely value in that. However, like these gen art pieces that are sometimes worth like even more than CryptoPunks. For example, I don't know what a Fidenza is trading at right now, but I guess it's like same prices as a CryptoPunk or almost the same. That's very interesting to see, in my opinion, and I think it would be,
so
in hindsight, it would be a cool idea to think about it as a high beta play on Ethereum, but it's still easy to tell.
So okay, let's go back to the US dollar example because it makes it easy for people to understand.
Mm-hmm.
You have the choice. You've made some money. You bought your dollars. You're like, what am I going to buy? I'm going to buy a house on the beach in Miami, or am I going to buy an Andy Warhol?
Yeah.
They're both worth about the same amount of money. One is considered the security of real estate. The other one is rare art. So it kind of works, right? So Fidenza versus Punk. Punk really is a piece of prime real estate.
Yeah.
Because it's not the artwork, it's what it stands for. It's like being on Fifth Avenue or, it's being, in Palm Beach or the Hamptons.
Yeah. Understood.
Yeah. It's very interesting. It's also interesting to see, like in DeFi, how these economies, like these tokenized economies, in terms of NFTs and basket of assets, are coming to an existence as well. And this will only give extra value to NFTs, in my opinion, if you can give them, as for example, in collateral to get some extra value there. So yeah.
Yeah, but the problem is again, humans being humans always take too much leverage, and then they blow up.
Yeah.
Or the person lending to them blows up. I mean, it just never stops. So I just stick everything in my ledger and don't do anything with it. Because I've been around long enough to see everybody go bust.
Yeah. I see you have a nice Xcopy. I wouldn't want to lose that one either. I mean,
No, and I've got a Punk and I've got an Ape and I've got,
nice.
a Beeple, and they all keep changing on my token frame behind me.
I saw.
Yeah. Okay, cool.
Jerome, can you talk about the rise of decentralized finance and how traditional institutions can adopt services, maybe?
Yeah. So maybe like a cool insight in institutional crypto is that there's a very cool sometimes arbitrage between CeFi, DeFi, or centralized exchanges, decentralized exchanges, for example, providing liquidity in somewhere in DeFi and then hedging it to become delta neutral and actually gaining like these crazy yields. What's your view on that? Like, do you think that these often very interesting plays are like here to stay, or do you think like what's your view on DeFi in general, maybe to start?
First, to go back to your original point, is I set up an asset management business called Exponential Age Asset Management that invests in crypto hedge funds.
Okay.
And the reason is we know that individuals are coming into the space. So that's, you can own the underlying chains, you can own NFTs, all of that stuff. But we know the institutions are coming to invest as well. And we know a lot of them are interested in DeFi. But when I look at it, the hedge fund space in TradFi is $3 trillion. The hedge fund space in crypto is about $5 billion. So the reason you're seeing so much arbitrage opportunity is it's a function of not enough capital in the space.
Yeah.
Which is why when somebody blows up, it has huge knock-on effect. When 3 hours capital blows up, it has huge knock-on effects. So there's not enough capital in the space. That will disappear over time. I mean, trust me, as soon as they can, every investment bank will trade the arbitrage as they always do. All of the hedge funds will. The market makers do already. And that's a good thing for DeFi.
Yeah.
Even though, yes, the yields will come down and etc., but you're basically putting risk taking in the hands of risk takers and diversifying out a bunch of 10,000 hedge funds that are all running billions of dollars. We have a much more robust DeFi system. Right now, DeFi is still a bit fragile.
No, I totally agree.
So I think DeFi has a huge future, but firstly, it's difficult to use. Okay, that's fine. And B, the regulators are scared of DeFi still. But I think they'll get there. I don't have a problem. I think we'll have another DeFi summer at some point once we have another breakthrough in DeFi. It can't be just another stable coin. It can't be just another way of getting leverage. There needs to be something different happening in DeFi to make people come actively in to use it.
Yeah, there are a few cool things that already happen. I mean, if we see that for example, the UniV3 with a concentrated liquidity, upgrade, I would say, makes it possible to hedge when you provide liquidity there, and makes it a lot more capital efficient. So that's like one big breakthrough that I would assume that really would push DeFi like over the edge and gain a lot of traction, mainly from institutional players. Because now you can actually provide liquidity in the pools, in the AMM pools, within a given price range. Because you only provide it in this price range, you can perfectly calculate your delta at any given time interval that you choose to be best. You do some research on it. You throw some quants at it, and they'll definitely give you an outcome. And then you can actually capture this crazy yield generated by fees, which is awesome in a delta neutral way. And I would have assumed that this would really be a breakthrough, but it kind of disappointed me a little bit. I mean,
because again, with the pools, the KYC AML element makes it very difficult for Blackstone, BlackRock, Apollo, all of these guys to come in. And true. Once we solve that, we're going to have a two-tier system. There's no way around it, because a bunch of people don't want to do full KYC AML and everything. I don't think there's any way around it, because the ECB won't let you, the Fed won't let you. So you're going to have to do something. But once they sort that out, then I think we will create much more opportunity in AMM systems, all of this stuff. The other development in DeFi that I think is super interesting is, I was in, European equity derivatives for a long time, and there was a huge market in structured products. So those are kind of yield funds, stuff like that. Now, in Asia, all of these vaults are really interesting, which are option overlays and yield generation and other kind of structured products. Because ETH has a yield now, makes it very interesting, because you can take the ETH risk, use the yield, and buy calls. You can have enhanced upside. You can have protected downside. Right. This, I think, is a huge unlock for institutions. And I know the European wealth management, whether it's the Bank de Group of this world or the Swiss banks, or the Germans, they will all offer this to retail clients in the next bull market.
Yeah,
there's huge demand for the yield, and a lot of people using upside kind of guaranteed structures. So I think that's a big one that's sitting there as well.
Okay, thanks.
And also decentralized exchanges. You know, we've really got Uniswap, we've got the DXDY, we've got there's only a small amount in options still, Deribit and others. That whole space, I think, can get more interesting as well.
Okay. Jerome, the last topic we want to talk about is actually artificial intelligence.
Yeah.
It's also a nice topic that is not hyped, but very popular.
Might be very popular today.
What's your take in general on AI, and how can it maybe accelerate? Hoe zeg je dat? Yes. The adoption from Bitcoin. I think it can help the adoption in cryptocurrencies also. No?
Yeah. So I, for a long time, had a thesis called the exponential age, and you can look on YouTube.
I know it. It's very good, very nice.
A lot of this is the nexus of all these technologies coming together at the same time, right? Humanity has never faced anything like this. So just so people understand, the whole system of money is being redeveloped in front of our eyes and digitized, which is crypto. AI is the replacement of human knowledge. We've got robotics, which includes AI and robotics together, gives self-driving cars. We've got space travel, satellites. We've got green energy. There's endless amounts. So the cost of energy is coming down. The computing power and the output from that compute power is going vertical. Okay, so this is going to be a terrifying moment. And people are seeing this now with how fast AI is moving. It's kind of what we're kind of used to it in crypto, because it's been like this as well. You know, if you remember back in 2021, we had DeFi Summer, then NFTs, and it's like, oh my God, you know, what's going on? It's so fast. AI is having that moment, but it's even faster. It went from 0 to 100 million users in 6 weeks. It took crypto about 6-7 years to do that. I mean, this is how fast this is.
However, we've been looking into AI already, like from 30 years ago. I mean, it's not a new thing. We've been working on it.
It's not a new thing, but ChatGPT was.
Yeah, I would agree.
Right, that GPT-4 large language model was like, GPT-3 was good. GPT-4 was at a whole order of magnitude different. And now these agent AIs being built on top, where it basically does the work of a person. You can ask it to go do stuff, it does all the time. That's all happened. That whole agent GPT thing has happened in a week.
Yeah.
So, okay, what does it mean for crypto? Well, firstly, all of this is moving towards the metaverse, which is the digital lives that we all live. Even now, we're partly in the metaverse by using digital video technology to do this. But as we accelerate and hurtle into the metaverse, which was a hype word, it's now fallen down. And trust me, it's coming up the other side again as AI blends with the digital world, because now you can make digital images super fast and digital avatars and everything else. It also means we can make a huge amount of fake stuff. And that is not a good thing for society, where you don't know who to trust. We already have a fabric of trust that's broken down across the Western world. People don't trust their governments. They kind of don't trust each other. I mean, it's difficult. So if you allow this technology to proliferate deep fakes, we've got a real problem on our hands. So the only way I can think of really truly authenticating content is using blockchain technology.
Yeah.
So I think it's that. But on the other side, it does accelerate the metaverse. And what are assets in the metaverse? They are NFTs. You know, what is the payment system? What is the payment system from AI to AI? We're already seeing these agent AIs. Well, soon we're going to have payments. Hey, if you want to use my agent, you're going to have to pay me, and one AI will pay another. That is not happening in US dollars. That is happening in cryptocurrency. Yeah, for sure. We're also seeing space. Really interesting. I interviewed a guy who came out of Jet Propulsion Labs at NASA on Real Vision called Leon Alkali, and he started a VC fund for space. I'm like, really? What's there to do? And he's like, oh, you have no idea. And again, it's on YouTube. It's unbelievable what people are building in space, what they're doing. I mean, he's like, oh, we're going to have 3D printing of machinery on the moon pretty soon, so we can then build rocket ships to take us further because we avoid the gravitational pull of the Earth. He says we're also stringing up, if you look what SpaceX is doing, we're stringing up server farms and satellites everywhere. I mean, a satellite now is coming up in this size, and they're being spread in a network everywhere. So anybody can own a satellite. The costs are coming down exponentially. And what they're saying, what he said to me, I didn't realize this, is like, oh, well, there's a problem now because so much data is being generated at the satellite level. They can't keep sending it down to Earth to be processed. So what they do is they're building server farms in space. And you have to pay for the data storage. And the answer is cryptocurrencies, because there's no sovereign in space.
Yeah, of course. Yeah.
So look, this is all the same thing. We're building this entire future in front of our eyes at a ridiculous pace, and they're all interconnected.
Mm-hmm.
You know, don't forget Internet of Things, payments, that will all be eventually crypto payments. You know, car payments. You know, my belief is that Elon Musk will use Doge for streaming car payments, and he'll use Doge for Twitter payments, and he'll use Doge for space payments, because why not?
Yeah, if he changed the Twitter logo already into a Doge,
there's something going on, right?
There's something going on.
False flag this stuff. He tells you in advance, but people don't believe any of it.
Yeah, no, indeed. Maybe like a last question that we didn't really get to touch upon is we talked a little bit about the recession. How can we maybe protect ourselves or maybe our portfolios for like this recession that might be coming to Europe in the near term?
Well, if we know there's a recession coming and we know the outcome from the ECB is to cut rates and print money, the best single thing you can do is buy more crypto. It sounds ridiculous, but it really is. Now, does that mean it goes up in a straight line? No,
of course not. Yeah,
but you know, we're talking about how do we protect ourselves for the recession, coming out of recession. You know, I think it's going to be slow coming out of recession, even though I don't think the recession is going to be terrible. Why is it slow? Because AI is replacing jobs at a very fast pace. So I think that's problematic. And the US has got this commercial real estate problem that we've learned about. So there's a big overhang of stuff. So that usually means that the central banks are usually easier for longer. And inflation, it's very difficult to have inflation when you're replacing knowledge workers by AI at zero cost. I mean, so I'm not a big believer in structural inflation. Yes, we've got some problems as we move to the full green mandate. Yes, there's going to be ups and downs in commodity prices, but it's not structural inflation. I just don't see it. So in which case, crypto does well. You know, my view is we've probably got another 2 to 3 years of a good run into end of 2025, let's say.
Yeah, makes sense. I mean, there's also another halvening coming, and you know, like these events will only get priced in earlier and earlier. So yeah, you might be right.
Within a year is the Bitcoin halving, and it's the most interesting time of
well, the Bitcoin halving, I think, is related just to the monetary cycle. And there's a lot longer topic on this. Again, I've put it on Real Vision, is everybody in the world reset interest rates to zero in 2009. Everybody, every single corporation, every central bank, everybody. It was the same time Bitcoin came out.
Yeah.
They're all related. The liquidity cycle.
Yeah.
They're all the same time. So is it a halving cycle? Maybe that's what causes it to outperform. Maybe it's just the monetary cycle. It doesn't matter that it's the same cycle, right? So it doesn't really matter. But it's like all liquidity cycles are all timed at the same thing, because the whole world reset interest rates at zero all at the same time, which has never happened in the history of mankind.
Yeah.
Okay. Last question. Your take is to buy more crypto, you said. But what are your favorites from the layer ones, layer twos? How would you?
I don't trade a lot, so I just buy and hold.
Yeah, me too.
Yeah, and when we see these, you know, if we think of that long-term uptrend, and when we get to those points, then you want to buy them. So, you know, I spent a lot last year June, November, and then January buying crypto. So I'm overweight ETH. I own a reasonable amount of Solana, small amount of Bitcoin, and I have a small basket of other stuff, just out of interest. Everything from Ape to Doge to Polygon, Matic.
Matic, yeah.
Yeah, and what I do occasionally is I'll make a switch, over the course of a cycle where maybe something starts outperforming dramatically.
Yeah.
I'll maybe do something. But even that, when I look back, generally get some of those wrong as well. I'm not sure I really add value. The only one I really add value is when I did the Bitcoin ETH switch in 2021. We will probably get another one of those, whether it's Solana or whether it's Matic or something, where we'll get another one of those opportunities where something gets to that real mass adoption phase. I don't know what it is yet.
Yeah. Okay. Thanks, Raoul.
Cool. Nice. Awesome. Yeah. Thanks a lot, Raoul. It was very interesting to talk with you today.
Great.
Do you have any other questions you want to add, Tim?
I don't know. Maybe the audience have some questions for Raoul that we not covered yet. But yeah, short questions because Raoul has spent it's just 1 hour that the time is we have with Raoul. Otherwise, I want to thank you for this conversation a lot. And maybe you're interested to come back within a year when the halving is there and when we have a bottom in some cycles. Maybe you can give your take then about the next few months then. But it was very interesting to know what you're thinking about the markets. Just in macro, but also what you think about AI or crypto. It was very, very delightful. Yeah.
Great.
Then in the meantime, we will keep on following you on Real Vision.
Absolutely. Great, everyone.
Awesome.
Take care. Good to see you. Good luck out there.
Likewise.
Oké, thanks. Bye-bye. Oké, mensen. Dit was de call bij Raoul Pal. Het rijmt ook nog. Mijn Engels is niet top, ik weet dat. Dus daarom dat we Jerome vandaag in ons midden hadden, omdat hij ook meer van deze markten thuis is. Waarvoor ik Jerome ook wel heel hard wil bedanken voor deze interessant gesprek met hem. Het was zeer goed voorbereid ook. En ja, je moet er toch altijd moeite in steken, Jerome, om aanwezig te zijn. Dus heel hard bedankt vanuit de Trade Premium community. Verder wil ik er iedereen ook nog attent op maken dat we woensdag een lanceringscall hebben van ons nieuw product. Dus het zal plaatsvinden om 8 uur en dan hebben we de belangrijkste events van deze maand gehad. Zijn er nog zaken die je wilt meegeven, Jerome, naar onze mensen toe?
Nee, geen idee. Ik weet niet wat je...
Ja. Wat was het voor u het belangrijkste, Jerome, dat jij onthouden hebt van deze call misschien? Ik vind dat wel een interessante.
Ik denk sowieso wel die liquidity cycles, als je er eigenlijk bij stilstaat. Wij zeggen altijd inderdaad dat crypto is een inflation hedge of whatever. Dat is eigenlijk niet waar. En hoe dat hij het dan zegt van die basement hedges is een veel interessantere en veel accuratere manier om naartoe te kijken. En als je dan op die manier naartoe kijkt, dan is het logischer om bijvoorbeeld bepaalde assets niet te denomineren in USD, maar bijvoorbeeld in inderdaad die liquidity van de G5's. Dat was een heel interessante manier om er naartoe te kijken. En dan ook gewoon DeFi, de tractie dat misschien mist in DeFi vandaag is eigenlijk enkel en alleen maar die KYC. Vond ik ook wel een interessante take.
Ja, voor de grotere partijen vooral, hè?
Inderdaad, want er is zoveel, zeg maar, delta-neutrale yield te rapen daar, die heel aantrekkelijk is, maar dat gewoon niet compliant is, omdat er regelgeving mist. Dus dat vond ik ook wel interessant.
Ja, dus misschien kan het zelfs positief zijn voor DeFi als er meer regelgeving komt in die sector.
Who knows? Of misschien als er inderdaad 2 verschillende systemen ontstaan.
Oké.
Who knows?
Kan perfect, hè? Private. Nee, goed. Dan gaan we hier afronden. We hebben ongeveer toch wel een uurtje gepraat. Ik hoop dat iedereen het interessant vond. Amai. Ik had toch wel een beetje zenuwen, om eerlijk te zijn. Maar ik vond het een super goede call met heel mooie inzichten. En ik hoop dat jullie er altijd allemaal iets aan hebben gehad. Hè. Dus bij deze. Tot de volgende. Bye bye.
Ciao, ciao.